So as I said, like, first and foremost, we get to these markets, we want to be able to understand which direction overall the markets are moving. Now we know US 30 has been bullish. We know that all the indices have been bullish. Why have all these indices been bullish, guys? So can somebody tell me why the indices generally, every single one of them, are bullish? Why is the US 30 bullish? Why is the Tech 100 bullish? Why?
Tech, tech, tech earnings have recently been released. I know, and some of the results were good.
I'm talking about generally. I'm not even talking about just what happened recently.
To do.
That's what they're designed to do. They're designed to be efficient. If the US 30 is the top 30 companies, if you're number 30 and you're on the slip, you're not making the money you're supposed to be making, you become 31. Well, you get replaced by the guy who was sitting there on your heels making good money. And every single Monday morning, when these guys come and they sit at the table, they're probably not sitting around the table and trying to racking their brains, bringing in the world's best, the world's most intelligent, in their position to try and work out how to make less money. More likely it's about how to make more money. All right. Hence the reason why these charts have been pushing up and up and up. Hence the reason why, in general, when somebody turns around and says to you, listen, you want to make money from the markets and you don't want to learn how to trade the markets, which typically, because of the skill it requires to do, people will say is a mug's game. You're trying to time the markets and trying to learn how to trade. Typically, they'd say, yeah, probably not the most cleverest thing to do, because you will have to learn a skill. Whereas they will tell you, just go and buy the S&P 500. Yeah, just go and buy one of these markets that is essentially designed to grow over time, and put your money there and forget about it. Yeah, because look, if you was in here, for argument's sake, obviously this isn't the S&P 500, this is US 30, but just to say for argument's sake, somebody told you about this when you was going and buying cars and jewelry and Rolexes, and you were spending stupid amounts of money on clothes, going and buying £1,500 t-shirts and jackets for $3,000. Instead of you doing that, if someone just said to you, let's pick a time. It's 2026 now. Let's roll off 20 years. Yeah, 2006. Let's go and roll off some 20 years. Let's roll off 15 years. All right. So let's just go around about here. Let's go 2011, 2010. Where are we? Around about here. If somebody just said to you, bro, instead of you going and buying that big chain, I get it. I know you need the big chain because gal are going to be watching you and you're going to be feeling like the guy. I understand. I get it. But instead of you buying the big chain, just buy US 30. Just buy US 30. Just go and take your 10K that you're going to go and buy a big chain with, or your 30K that you're going to go and buy. Oh my gosh, I wish somebody spoke to me like this back in the day. The amount of money that I spent on cars. Yeah. If somebody just said to me, Jay, go and buy this market and forget about that money. Go and drive a normal car, an average car, and just go and put all that money you're going to buy, because bearing in mind we was buying cars for cash. And my is like, yeah, boom, let's put your money right here. This was when this market was worth 7,000. Now, we're at 49. You might as well say 50,000. Because this market is designed to go up. It's got big players in this market. Got our Mag 7 in this market. Got other people going on in this market. These, like, obviously, the tech sector, the NASDAQ, even more so. But it's the exact same principle. All right? Because these markets were designed to go on up and up and up and up. All right? Yes, they can have retracements. Have a look. Zoop. Yep, they can. Yep, they can. Yep, they can. Yep, they can. Yeah? And more than likely, very soon, yep, they can. But overall, they are designed to go up and up and up and up and up. Yeah? If I was a gambling man, in the next 20 years, I'd say the price would be more than it is now. Yeah? If I was a gambling man, just looking back at how the markets performed historically. Okay? Now we know that. We know better now. We know how we can advise our kids. We know that what we can do with our funds. We know that if we're looking at, because look, at the end of the day, bro, I can remember 10, 15 years ago. I can remember them times. Don't get twisted. It was 10, 15 years ago, but I can remember them times. They don't like to say that they're, you know, a memory that I can't remember. They seem like they were the other day. But if the other day I had that money wrapped up in the markets right now, I'd be a very wealthy man. If I was invested in certain companies, maybe I was a bit more specific, maybe if I'd be a very wealthy man instead of going and spunking my money on things that I cannot tell you where they are or what I've done with them right now. I cannot tell you where that pinky ring I bought is right now, where I was going back to the jewelry store and I was moaning about the diamonds were coming out in the pinky ring. I can't tell you where it is. I can't tell you where that jacket is that I went and spent big money from in whatever, what was it, Zionco back in the day, or Probitos, or I can't remember. Selfridges, I can't remember. I can't tell you. I can't tell you what the shoes that I wore that cost me. The trainers were £1,000, £1,200 for the trainers. I can't tell you where I wore them and how many people stepped on them within the first half an hour of me being in the venue. I cannot tell you. But you see this? I can look at my portfolio and go, that money allowed me to do X. That money allowed me to do Y. That money set me up. So when I became a big boy, I had options. I could say, you know what, I've got this much worth of this, I've got this worth, yeah, that is sitting in the markets that I can tap into, that I can do certain things with. All right. But at the moment today, we're going to talk about how we trade these markets. Now, how we trade these markets is by understanding the principles of the market. Okay. So we're going to sit around, we're going to say, okay, these markets have a certain amount of rules that they play by. They play by certain rules. For example, they move in waves. Yeah, they impulse and then they retrace. They impulse and they retrace. They impulse and they retrace. We understand that. We understand that these markets, as much as they've been going up and down, up and down, up and down. Just every so slightly, they make higher highs and higher lows and higher highs and higher lows and higher highs. And that's why the trajectory over time is bullish, going up. So we understand certain rules. We understand that these markets like to move towards liquidity, okay? And it's our job as day traders. We're trying to get in and out of the markets. It's not an easy thing to do. We're trying to get in and out of the markets and take profits as and when. And for us to be able to do that successfully, we have to not only master a strategy, is we have to learn and we have to stick to some of the rules of this game. Okay, so I'm looking at this on a daily time frame. In and around here, I've marked out some daily points of interest. Previous daily highs, okay, which means the daily highs from Monday, okay, previous daily high, previous daily low. I've marked out the imbalance in between where the market's open, because the market opened down here, the bottom left-hand corner of this green candle, if you can see, and that means there's an imbalance above. Yeah, between this candle and this candle. I've marked that out with this gray block in here where it says imbalance. Okay. But that's not enough for me to just take a trade because I'm a day trader. This is a whole 24 hours in time, each one of these candles. And I'm looking at this right now at 8:26, wondering what's going on right now if I can make money. So that's not enough for me to decide. So I need to zoom in. So when I zoom in, say for example, I drop to my hour time frame, I'm able to see what's going on. I get a better picture now. I still know that down here was a previous daily low. And up here is a previous daily high, but now I can look inside of that time period and see, whoa, since this morning, because this is Asian session here, okay? How do I know it's Asian session? Because I've got one indicator. The only one indicator that, and I don't like to call it an indicator, but it just shows me the sessions. These colors, this red block here is an Asian session. This yellow block here is London. This blue block here is New York PM and AM in here. It lets me see just visually where those sessions. You can have any indicator shows you the sessions. Now, why I want to know about the sessions, because different sessions over in different parts of the world are at their desk trading, create or stop trading, create some levels that we're able to use as guides. Okay, so we use Asian session as a guide, yeah, to say that Asian session creates a bit of a pitch whereby we want to see whether or not Asian session liquidity gets swept and then the market pushes in a different direction. Now, there's a couple of things that within the Unity strategy we've identified. First things first is this. More times out of 10, because everything I'm saying to you is not 100% of the time. Nothing is 100% in life, let alone in these markets. Okay? Is that we have seen that this market here, when we see the markets leak out of an area early, When London opens, we typically see London disrespect that level and push above it. Yeah? We see that happen time and time and time again. Okay, so when London opened, when the London traders got to their desk after their bank holiday, right around here, close to 50% of the Asian session, they said, whoa, yo, did you see earlier how the little Frankfurt, little minions in Frankfurt trading, how they breached Asian session high? Well, if they can breach it, we're breaching it. If they can push past it, we're pushing straight past it. We ain't got no respect for that level. And as we can see, like clockwork, the market came down to around the 50% level of the Asian session. Yeah. And the market decided to change character from being bearish down in here, change character in here, and made a manipulation W on the 3-minute time frame, which is an indication for us of a change of character. Okay. And then it continued to push up bullishly. Yeah. It broke this structure, broke it, corrected by that little push down here, continued here. And for all purposes, there was an entry with the Unity strategy. It's not a 10 out of 10 entry. Yeah. It's not an A grade. It's more B grade setup from here, which allows this market to be pushing up. Okay. Now, I'm concerned because even though that market's had a reaction from there and pushed up and violated those highs, I'm concerned that the higher time frame liquidity, and it's closer to the higher time frame liquidity, is down here. That's our previous daily lows. So I'm very concerned that this market might want to come and sweep those lows first before doing something else. And let me explain to you why. Okay, because when we look at these charts like this, okay, this is the daily chart. When we look at the daily chart and we just look through historically, these markets like to take the previous daily high or previous daily low. We can see that this candle here took the previous daily high. We can see that this little red candle took the previous daily low. Only very rarely we have something we call an inside candle where the market doesn't take the previous daily high or previous daily low. But that might be 1 out of 10 times. We can see this candle here took the previous daily low and the previous daily high. We can see this one had another little inside candle. But then we see the market's taking these highs. We see the market taking these highs. We can see the market taking these lows. We can see this happen. Yeah. So typically when we see candles here, we make an assumption. The assumption isn't 100% correct, but our assumption is that some point within the day, the market's going to either take the previous daily lows, which is where my little mouse's pointer is now, or the previous daily high. We make this assumption. Now, does that mean it's going to happen? No. But we just put that little chip in our little basket to say, okay, that might happen. So we identify that low and that high, as you can see I've done here with those 2 white lines. One saying daily high, one saying daily low. But that's still not enough for me to trade. I need more information. So I need to be able to zoom in and see what's actually going on. Why? Because ultimately we understand that these markets are volatile. And these markets can move based upon other factors. For example, on a 4-hour time frame in US 30, we can see how this market was essentially accumulating sideways, manipulated to the downside, because we understand in Unity strategy, accumulation, manipulation, and distribution. So we can say that these markets were accumulating in here. You can see all those little candles on a 4-hour time frame. Look, all of those little candles you can see in that box I've just drawn are 4 hours in time. So basically the market was doing nothing for 4 hours, not really doing too much, but kind of, trading within this range. But then we saw the market manipulate, which we all understand. And the bigger time frame actually looks like it made a big old manipulation W. Actually looks like it came and it made a manipulation pattern in here. Look at that big manipulation W, yeah, in this manipulation. And then, obviously, accumulation, manipulation, distributed. Yeah, the market distributed higher. The market distributed higher from this level like that. That would be our distribution. Okay, but now on a bigger picture, maybe the market's just coming and tapping into that manipulation W. Yeah, this is the manipulation W. Maybe this was all indication as it broke this structure. This was correction, coming down and correcting into this level. So now we're tapping into this point of interest of our manipulation W on a much bigger picture. This is very possible. This isn't impossible. That's our W there. The market's come and tapped into that level to only to push up into there. So though we can see there's a level of liquidity that the market hasn't taken, yeah, that could be that's a very realistic play that maybe the market's coming tapping back into here only to push up higher. Okay, now let's drop our time frame now. So now we've got that in our brain. We've got the other bit in our brain in regards to a previous daily low over here on a much bigger picture. We've zoomed in. We've seen a big old manipulation W in the market potentially correcting and tapping into a point of interest, which happens to be in this huge bit of imbalance that the market's come and tapped into lovely in this imbalance. Yeah. And we're sitting here and wondering, is the market right now ready to turn around from tapping into this imbalance and potential manipulation W only to make a higher high? Yeah. Only to make a higher high and continue pushing up? Or does the market want to come down here? My gut says that the market actually wants to push up. Okay. But I can't just trade my gut. I got to trade what I see. So what I can see here is the market came down here, and yes, even though the Asian session highs have been taken, I've seen nearly, let's have a look, from Asia, nearly 1, 2, 3, 4, 5, 6, 7, 8, maybe 8 hours of just bullish energy. I've seen 8 hours of bullish energy, yeah, without actually taking these previous daily lows. I'm concerned. I'm thinking to myself that regardless of what happens, we might get to a point, and I've circled a little yellow circle over there, which is a New York session high, where we might see that market make some sort of retracement. Now, my concern about the retracement is, does the market come in here, make some sort of retracement, and actually come and get these lows, and then go? Yeah? Or does the market not care about these lows and want to simply just make some sort of reaction in here and then keep going up? I don't know, because my crystal ball has actually run out of batteries, and I actually don't know. Yeah, but what I can do is this: I can read and react. So in my opinion, for today's trading, because it's not going to do all of these things in one day, I'm looking at the possibility that from here, this market may have a reaction in here and may trade either down towards a point of interest, which would be a previous battlefield, an imbalance, 50% of the Asian session, whatever it may be, yeah, and then may turn around and keep pushing up. Or even better still, it may come and get this Asian session lows, which would be great. Not Asian session lows, this daily low, which would be great, because that means it will take this daily low, fantastic, tick in the books, and still stay within this imbalance of our manipulation W, and then could do that. Yeah. Now that's what I'd like. If I had a wave of magic wand and say, what would I like this market to do? I would like it to do the following. I'd like it to do this, have a very clean and clear break of change of character, give me an indication, correction, continue, and trade all the way down in here, take these lows, and then from in here, decide to do this, and then go all the way up in here to take out previous highs. That's what I would love it to do. That's what would make sense to me. That's like if I'm watching a movie and with 5 minutes within the movie, I can tell you exactly what's going to happen. I'm like, yeah, she did it in the kitchen with a candlestick. She's guilty. He's going to kill this person. We know what it is. We're going to be there like, yeah, the black guy's going to die within the next 20 minutes. Like, we know. We can read it straight away. He's going to go. Black guy's definitely not making it past 25 minutes in this film, 100%. Yeah. That's what it looks like to me. However, sometimes I'm watching a movie and it has a little twist. It doesn't do. The bad guy survives past 20 minutes. Sometimes he makes it all the way to the end. I'm thinking to myself, that was a bit forward. Yeah. Sometimes it happens. And that's what has to keep me on my toes. I cannot marry a trade just because my gut says this or I want it to do that. I have to, as a day trader, I have to have my confluences, have my biases, understand what I'm looking for, but I must read and react. You see me just change this liquidity from this New York session to being available to now liquidity taken, and we've just tapped into the point of interest that I drew as soon as I came on the session, which is here. This is the point of interest. It's also covering some imbalance in here, I'm not just going to rush into the trade because I still got to see what I need to see. Yeah, which is the market reaction, a change of character. I still got to see all those things. But at the moment, this is currently going to plan. It's currently going to what I thought was going to happen. I knew we was going to take these heights from when the market was down here. I didn't just jump in because I can't just jump in the middle of a trade just for jumping's sake. Yeah, I'm not a follower. I'm a leader. I want to lead. I want to know what I'm doing. I can't just jump in behind a man who's already all the way up here and his stop loss is down here, and I'm just trying to play catch up. No. So I sat patiently. I spoke to you guys. We spoke about the whole process, but whilst that was happening, I'm watching to see if this market does what it does. That's why my alert ran, because I put an alert there. So now my alerts run, and that market is pushed into a point of interest. Now I'm very interested in a smaller time frame, what's going on, because I can actually see this market again doing a little bit of what? What am I going to say that the market was doing a little bit of here? Somebody tell me. What was that market doing a little bit of right in there? I mean, I'm just drawing on the screen.
A range?
Yeah, it was trading within a range. It was accumulating a bit. And so after accumulation, I'm possibly looking to see whether that market is going to give me some sort of manipulation. Yeah, and then potentially give me some sort of distribution, just like what I've been saying I'm waiting for. Just like the little path that I drew on the screen. So maybe that's happening right now. Maybe. I'm not getting excited. I've got to see something. Show me something. Yeah, so right now I'm hoping, just like I drew on my screen, that this market's going to make some sort of change of some sort of change of character in here to give me an excuse to execute my trade. Because once I see what is from my strategy, I execute my trade. And whether that win, lose, or draw, I'm happy. Because I've got a strategy. I'm a soldier. I've got my orders. My orders are to stay here, and anyone that comes out of that room with a red hat on is to shoot them in between the eyes. That's my orders. Yeah? So when I go back to my commander, my captain, and I turn around and say, yeah, I took out 100 guys with red hats, that's my orders. That's my strategy. That's what I got paid to do. I can't say, yeah, there was one guy with a red hat, he had a nice face, so, he was smiling, and I thought to myself, you know what, let me leave him. There was another guy, he was a black guy, he looked like one of the homies. I said, you know what, I'm going to leave him. That doesn't work. That's not what I'm here to do. I'm here to execute on my strategy. Yeah? I'm here to tell them and be like, listen, this is my strategy. When I see this happen, this is what I'm going to do. My strategy is, I've already identified certain things. If I see a change of character in here, after this market's been accumulating, after this, I pointed out this point of interest, after we just taken liquidity from New York PM session, and I see this market here turn around and make a lovely manipulation pattern in here and change character, start making lower lows and lower highs, I will execute my trade. And whether I win, lose, or draw is irrelevant because I manage my risk. Yeah, I manage my risk. Now, I'm not over the moon with this at the moment. This doesn't look like, but let me look on it. I'm not over the moon with that at the moment. Now, sometimes these markets don't give us exactly how we want to see things. Why? Sometimes they happen on a smaller time frame. Maybe there's a beautiful manipulation pattern there on a 15-second time frame. Yeah, but we don't want to get down to seconds and start going down that rabbit hole because it's very noisy there. So I'm going to do, to the best of my ability, be patient and look to see if I get what I want to see. And just for the people that, FYI, for the people that don't know what I want to see, is I really would like to see this like this shoulder nice and long, this push down nice and strong as my indication, then some correction, then some continuation. But does it always happen as beautifully as that? No. Is it always so obvious like that? No. Yeah, so right here, my concern is that maybe we're getting some sort of little change of character in here. The market making this little bit of I look like I want to do something here. And maybe I've made a little retracement in here. And maybe I'm trying to close down below here. But I've got no information to confirm that to my left. I've got no structure to confirm that to my left because the market didn't make a manipulation M with a higher right shoulder. All right. So the only thing I can do now is I can be patient. It looks like I may miss my entry. It looks like I may miss my perfect entry. because it's very tight. Now, what I could do here is two things. I could say, you know what, I don't like the look of this. It's not clean, but it's doing everything else apart from it not being very clean is happening. I could say, you know what, I normally risk 1%. I'm going to risk 1/4% right now. Or if this candle closes below this green wick here, which it hasn't done, I could turn and say, I'm not going to risk my 1%. I'm not going to risk 0.5%. I'm going to risk 1/4% because I don't like it. What am I doing? I'm tweaking the parameters to keep me safe. I don't love this in here. I was liking everything, but I don't quite love this. But I know that maybe it's happening in front of me, but it's just not as beautiful as I want to see it. I could turn and say, you know what? I could tweak my risk to say, if that market does give me my continuation, that I'm going to get involved, but I'm going to not only risk 1/4% of my account, or not. Or I can say, I don't like the look of it. I've been doing great trades all week. I don't need to take the risk. Yeah, I could do that. This is what I'm giving you the options. I'm not trying to tell you some rigid way of going about trading. Why? Because when the lights come on, you're trading all by yourself. You get it? I'm not here to hold your hand. I'm not giving out signals, and signals don't work. Yeah, all the guys go, yeah, this guy takes signals. Okay, it's only as good as, you know, when you took the trade and whether or not that trade needs a certain level of management, etc. Because I can give you a trade, you can take the trade and lose money, and I can take the trade and win money because I know how to manage my trade. You don't know how to manage your trade. Yeah. So if you see here right now, for example, here, this is giving me like potentially this market may continue running and do it. And look, let's see, next 37 seconds, give me a 1 minute close. I'm still patient. I know somebody over there is going, look, Jay, it's gone. Maybe it's gone. Yeah. Even if I took this trade right here, I'd be very concerned about it because now we're back on the previous battlefield, which was the accumulation on here. And I'm not over the moon about this structure in here. So if I was, I'm giving you all sides of the coin to take this trade, I'd take it. I could either get aggressive above this last high or here, but it would only be risking maximum 1/4% of my account. So let's imagine I'm going to do it for visuals. I'm going to do that visually for you guys. I'm going to go into a paper trading account and I'm going to visually take a trade. All right. Let's just imagine that is 1/4% because I never measured it out. It's not 1/4%. That's about 1% of the account. So just imagine that was 1/4%. Now I'm telling you, don't follow me. I'm taking this visually to show you the implications of what we're saying. Imagine this should be $250, not $1,000. Okay, because ultimately, why? Because I didn't like this structure in here. This wasn't perfect for me, but if I wanted to, and I thought to myself, you know what, I've got work in a minute, boom, 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 I'm going to take this trade and let it run. I'm not too sure. I would take it, but I would not risk 1%. I might say, you know what, I'm going to risk 0.25%. You know why? If I lose 0.25% on this trade, who cares? Who cares? I don't care. But if I get involved in this 1/4% trade, the only reason why sometimes I encourage you to do this is because now you've at least got a focus that you're focusing on this potential setup. Yeah. And sometimes you've got to have some skin in the game to do that. Yeah. So now let's imagine that this market starts to break some structure. I am able to scale in. I'm able to add to my position as and when I see this market break certain structure. As and when this market starts giving me more confirmations that it might want to push in a direction. Because remember, two things can be right. This market could start moving down here, giving me profits, and then kick back up in here to actually give me this much cleaner structure. It could both be correct. It's not to say, oh, you're starting good. No, it could both happen. This could start pushing down here, giving me some nice profits, come all the way down to maybe this level in here, previous battlefield of Asian session highs. And then it could push back up in here. And then make a big, massive manipulation and something that is beautiful, something that does tick all of my boxes, and then decide it wants to go to hell. Look, I've already drawn a potential path of what I think is, in an ideal scenario, if I was reading the book, it could do. I think it could definitely do this. And we'll leave this here for the week and see if this plays out this week. Remember, it was Tuesday already. Yeah, I think this definitely could happen. But does that mean that I'm going to be able to profit for all of it. No, there might be crazy L's you might take in that. Even though I know this is going to happen, if I don't get in at the right place, if I don't place my stop at the right place, I can still take L's all day long, even knowing what I think the market may do. And this is where a lot of people collapse because they think, oh, I knew it was going to go and do that. That's not good enough, bro. It's like when I see the traders like, oh, I told you guys at the start of the month that this market was going to be bearish. Bro, that's not good enough, bro. You told me at the start of the month. I mean, how does that help me? Well, which should I put my stop loss down at the start of the month? Why didn't you tell me that? Oh, my stop loss was 1,000 pips. Okay, well, that changes things a little bit, isn't it? So this is the nuance of day trading, is that you're trying to time the market, which is very difficult. But the way in which you can survive this, I'm giving you the blueprint, is by managing your risk. Because if I lose 0.25% of my account, who cares? I've got enough education that I'm not going to lose 0.25% of my account, the next 10 trades in a row. Because if I don't catch it now and I lose that 0.25%, okay, cool, 0.25% down. If I don't catch it again, I lose 0.25% again, okay, I'm 0.5% down. But if I catch it from here and I'm actually correct, then I'm going to get that 0.25% or that 0.5% that I've lost, plus some, and that's going to put me in a positive, and that's trading. Not every time I take a shot, I hit the bullseye. Every time Ronaldo or whoever your favorite footballer is takes a shot, they put it top bins. You see how many shots Ronaldo misses. It's inevitable he's going to be top goal scorer because he lets it go. He's a striker. When he gets the ball, he's nicking the ball. He's going to score more balls than the defender or the goalkeeper who's taking no shots. He gets paid to take shots. I'm saying to you, as a day trader, when we have our strategy, you have to lean into being able to squeeze a trigger. But I'm telling you, the most important thing for yourself is understanding how to manage your risk. I know for facts, not for just for banter, that the majority, as in 99% of the people here that have blown their accounts in prop firms or their life funds is because they were too big in trades. Can I get an amen to anybody that's been too big in trades and blown their prop firm account? Let me get an amen.
Amen times 100.
Let me get an amen from else. Who knows that they should have risked 1% max or 0.5% in a trade because it wasn't that great. But for whatever reason, they was like, I'm just going to make this. I'm just going to make this £100 because it's a nice round number. Let me just risk 100. Let me move my stop loss to £100. That's a nice round number. But £100 is 20% of your account, bro. How can you risk £100? How many times can you lose when you're risking 20%? Not even 5. Not even 5, because more than likely you're going to have a margin, and the market, the traders, the broker that you're with are not going to let you trade 100% of your account. I'm telling you, the problem is, and listen, and this goes to a bigger problem. We'll show you the bigger problem whilst we watch this. Yeah, the bigger problem is you just don't have enough money, and the markets know this. You see, you've got an account. Let's imagine even if you was doing okay, you decided to put £1,000 into an account. Jay is telling you you can't risk no more than £10 at a time. That's what Jay's telling you. So when you're in a great trade and you're like, oh yeah, I'm in a great trade and I'm £30 up, that £30 just doesn't hit the way it needs to hit, man. When you tell wifey, she goes, how you doing? He goes, yeah, I'm £30 up. She goes, £30? We just spent £30 at McDonald's. We just put £50 in the tank. She just spent £80 on her nails. So that £30 doesn't really hit the way it needs to hit psychologically. But don't get it twisted. That's a 1 to 3 trade that you've just taken. And that's 3% of your account. You don't make 3% on your account in a year with your money that's sitting in that West. Let me just say that again for the guy in the back. It's very, very possible that when you've taken that £10 trade and it's now £30 and your missus is looking at you like £30, that is 3% of your account that you don't actually make 3% on your money that you willingly, let me say that again because that got all tangled up. You willingly give to your bank, NatWest, Barclays, Santander, whoever you bank with, every single month you willingly give them your money. You say, hey, you hold my money. I've been working all week like a dog. I'd like you to hold my money for me. Hey, you hold it. And if you think they say, okay, no problem, thank you for that there, Mr. Jason. I'll hold your money for you. I'll put it in a little box. And it's your money that you've made all month. It's in a little box just waiting for you. If you think that's what's happening, you are deluded. Because they are trading your money and they don't give you 3% of your money in 365 days of holding your money. But yet, the junicle, the lie, the scam that is permitted in the Western world is that you willingly give your money. No, furthermore, your employer gives your money to the bank for them to go and make money from, for them to do 3% every single day and not give you 3% a year on your money. See, so this £30, it doesn't hit hard enough because you just don't have enough money. But let me tell you something. If you had more money, if you had more money, like this, yeah, that's from our £1,000, us adding 3 zeros, which makes that £1 million in an account. Let's add 3 zeros here. And then your wife goes, how are you doing in your trade? And you say, I'm 30 grand up. That 30 grand hits a bit better than £30. And you'll be very happy with closing your trade. I'm going to close out my trade here. I'm going to take my profits, 30 grand. Because even though your account's £1 million, 30 grand is 30 grand, buddy. 30 grand in Selfridges goes a lot further than £30. But you ain't done any more than you did with your £1,000 account. You're not any better trader. A guy who right now is going to go on Instagram and show you his profits and be like, oh yeah, man, look, guys. And he's got, guys, I'm 30 grand up in a trade and it's only 8:54 in the morning. He's not a better trader than you. He's got more money than you. And who knows how he's got his money? I don't know how he's got his money. I don't know if he sold his house. I don't know if his daddy's rich. I don't know if he just robbed a bank. I don't know if the broker that he's recommending all of his people in his Telegram group to go and sign up with is giving them a check every single month. I don't know whether or not he's selling pictures of his toes on the internet to make that money to put in an account. I don't know. But he's not a better trader than me. He's got more money than me. So now I'm there with my £30 trying to go and buy myself a little sandwich and a little can of Coke from Greggs. And he's turning around and saying that he's going to Hatton's, yeah, to go and put more stones in his Cuban chaps and chain. And he's doing all type of pictures. His videographer's following him around whilst he's in Hatton Garden, saying to me, I want VVS ones. Yeah, can you do this? Can you do that? And he's got a whole series of him spending his trading money in Hatton Gardens. And he's like, yeah, we're killing it. We're the NASDAQ shorters. And they've got a little name and they've got T-shirts and we're hyping up. He's not a better trader than you. He's just got more money than you. And he's leaning into the psychology that he makes 30 grand a day trading NASDAQ, and you're pissed because the last time you took a trade, you made £40. The only difference is he's got more money than you. The only traders I rate on Instagram that are going to be telling you about their results are traders that talk in risk to reward. Traders that talk in risk to reward. I risked 1 and I made 4. The actual number doesn't matter. I risked 1 and I made 10. And I'm telling you right now, you are under psychological warfare when you're trying to trade these markets and be successful, especially if you're in social media, especially if you've bought somebody else's courses telling you how magic they're. If your course is so magic, bro, why don't you just go buy a small island somewhere, yeah, and go and start helping the sick and building schools and if you can't lose, why are you here trying to take a little 89.99 off me when you could be out here healing the world? Because nobody's strategy is 100%. It's easy for me to put up Instagram reels and show you the highlights of my life. The highlights of my life right now would be this. Me turning around right now, going, "Hey guys, you can see I'm in the trade right now. This is another W in the thing. This would be a 1 to half at the moment. Blah, 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 blah. This is easy. It's 8:57. Blah, 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 blah. Put some W's in the chat. Whoever's in, I'll be going crazy right now. But this ain't me going crazy because I don't sensationalize me being able to do something that I know how to do. You don't come from your bed and you make your way to your bathroom and brush your teeth, and all of a sudden you throw an Instagram post about the way that you got out of your bed and brushed your teeth. No, it's normal. You know how to do that. I know how to read these markets. So I know how to tell and say, listen, this is what I'm going to do. Everything that's happened right now, even though it's not a 10 out of 10 trade, which I've told you, and this trade could still turn around. Yeah. If I wanted, I could make this risk free by dragging this, putting this here. I could do. Yeah. So therefore, I've got nothing to risk. I'm not gonna. Yeah, but I could do. Okay. But I'm saying to you, everything that's happened right here in front of you, I knocked out from when you got in here at 7 o'clock. From 7 o'clock when that candle wasn't even there, I said, listen, this is my point of interest. This is what I saw the market do. This level was New York session highs. This here was a point of interest in this imbalance. I drew the circle a long time before any candles were in this circle. If I lie, I fly. Yeah, run back the video. And now this market is pushing in this direction. The only reason why I said I wasn't too happy because it wasn't perfect. I said it wasn't perfect over here, and it still might not be perfect. It could still turn around. Look, I've pushed my stop to here. Yeah, I shouldn't do. I should let it breathe. So I don't really care. This is just for visuals. Yeah, but the bottom line is this: this market here could still turn around and come up here. It's not impossible. I like the fact that we've broken this little level of accumulation in here. Yeah, and we've had 1 minute closures, but it could still push all the way back up into here. But my point I'm making to you is this is just me carrying out my plan. If I carry out my plan every single day, look, I'm in the blue. I'm not in the blue massively, yeah, because I placed my stop at over here. But if I was placing my stop aggressively over here, I'm at a 1-to-1 right now. Yeah, when I got in this trade, I placed it above here, but I could have placed it above this high here of this market making this retracement that I said I didn't like the look of. Yeah, this push back into here, into this little bit of imbalance. I'm at a 1-to-1 now. I could start hyping. I see traders all day long and their strategies are 1-to-1s. They're like, guys, close your trade right now. That's our first trade of the day. We just made it for $500, $1,000. I've seen it. What I'm trying to teach you guys is not the sin, because I personally have a bigger mission. I have something I'm trying to achieve, which is financial literacy, which is understanding the markets, which is teaching you guys something that I wish was taught to me before I was buying chains and cars and watches and pinky rings and buying the most expensive jacket in the shop because somehow I thought it made me more of a man. I wish somebody taught me this so that I could say, you know what, let me spend 30 grand on a car. Let me spend maybe 20 on a car or 15. And let me take the other 15 and do this. Because then this trade here would have been, as we were just talking about, maybe not for £100 account. Maybe it would have been £1,000 account. Maybe it wouldn't have been a 10 grand account. Maybe this is a 100 grand account that I've decided to, instead of putting 100 grand into cars and jewels, that I put in a trading account. Why? Because I'm confident in my ability. Now, my £30 trade means that this morning I'm sitting around and saying, yeah, guys, I'm 3 grand up and I'm calling it quits for the day. And I'm going to go and play with my kids in the park for the rest of the day. Or I'm going to do art. I'm going to draw. I'm going to paint. I enjoy painting. So I'm in for 3 grand for the day. No, I'm just going to paint in watercolors. And my buddies are telling me to do certain things that shouldn't be done. Or when my boss wants me to come and work in a job that I'm not happy about, or when I'm feeling stressed because men are calling my name and asking me for this money and that money, I'm able to say, no, I mean, 3 grand today. Here, take your money. No, I don't need to go and do that. No, I won't be working here because I understand this skill and I've taught myself this skill. I understand the markets and I made 3K. And here, take your money and let me continue painting in my watercolors and live my life. This is what's important to me, that I'm able to pass that on to you guys. Is that going to be the case that every single day you're going to be making wins? No. Is that going to be the case that even the trade that we're sitting in right now, is this trade going to go for 1 million, pips down here? And maybe not. Maybe right now I'll make it risk-free. Maybe this comes and stops me at right now for nothing. Maybe. But I'll tell you one thing is that I had the opportunity this morning to close out this trade and make $500. Maybe. Like I said to you, this trade here, in my opinion, I don't love what happened here. I don't love it. And if I traded this properly without it being 1%, because I didn't, this is a visual trade, and it's not 1%, I don't care about losing my 0.25%. I'll leave it. I'll leave it and let it breathe. Yeah, because the market did come and made some 1 minute closures below this level. So maybe that's a lower low. Understand my strategy, understand my thought process. Maybe this now is a lower low than this previous low. So therefore, just on a basic level, maybe we're going to get a, if you want to delete everything off my chart to make it clearer, maybe now we're going to get a lower high. Yeah?
Yeah.
And then maybe a lower low. And then maybe that, why I didn't want to delete it is because I put that path before. Yeah, that path is there. Maybe our path that we said is going to happen, maybe that is going to happen right now. Maybe I'm lucky and I've actually caught this whole energy of this. And maybe that market is going to just continue going all the way down here in waves. And I'm going to be laughing my head off as it goes and it takes the day. Remember we spoke about from the start, which is a point of interest? Maybe it comes and takes that price. Maybe. But maybe not. Maybe I'm wrong. Maybe this market kicks back up in here first and does this manipulation M slightly higher over here, tapping into this previous battlefield even stronger. Maybe that happens. But this is how managing our risk, using that parameter, keeps us safe. Because right now, the market hasn't started breaking bear structure bearishly for me to start scaling in. As soon as it does, starts giving me more indication, correction, continuation, I can hit the button again because the first position will be risk-free. Then I can hit the button again. And I can tell and say, guys, I've got 4 positions in here bearishly that never at any time was I ever risking more than 0.5%. And now the market's for the whole day gone all the way down here and I've taken 5 grand out of the market, 10 grand out of the market. Very, very possible. Yeah. As well as that, I want to make sure what is going on in the world. Yeah. I want to make sure that there's no spanners that might turn up. Because if there's a spanner, i.e. some red folder news that could hit at 1:30 or at 3 o'clock, that might throw a spanner. It might add some volatility to the market. You know what I'll do? If I'm up 4 grand but before that time, I'll just say, you know what? Let me protect my 4 grand. Because I know, and I've been in these markets many a time, that red folder, maybe not so much the PMI in here. There's some PMI happening. There's not the real bad man here. We can't see the real non-farm payrolls and all them kind of bad man there. They're not turning up. If I'm up 4 or 5 grand and I've got that money in my pocket, maybe I might say, you know what? I'm going to take that money because I've seen in the past sometimes the markets do this and that volatility would just wipe me out for nothing. So maybe I don't want to lose my 4 grand up and I'm in a position where I tell and say I'm going to protect myself. That's me understanding the markets, respecting the markets, respecting that these markets can be volatile. You get it? And that's trading. Everything I've shown you this morning, the way I've broken it down this morning, look, let me try, can I copy this? If I can copy this, I can delete everything off. I'm not sure if I can. Hopefully I can copy, then I'll delete everything, wipe everything my charts. Everything I've showed you is trading. Managing your risk, sticking to your strategy, taking your trades, not being all excited and sensational. I'm in the blue, start dancing, start getting excited. We've all seen the memes. I've been sending a couple man on Instagram some of the funny memes that I see man blowing the charts. I see man getting excited. I see man doing it. It's quite funny. It is actually funny when you see man. They're like, yeah. The chart, they got no stop loss. Yeah, it's funny. But if you're trying to take this thing properly as a real skill, it's not sensational. It's normal. Me taking a trade right now that might, in the next couple of hours, I might put something in the group saying, yeah, look at that trade, that's my screenshot. Sometimes I give you a little gift there to be funny, to say, yeah, we're killing it. But that's just normal. It's not, I expect to take good trades. It's not like, oh, wow, look at me, I'm amazing, I'm dancing. I expect it. Trust me, I've taken a lot more trades than I ever post in the group to hunt, to stunt to you guys. Yeah? Let's make it normal. Let's normalize managing our risk. Let's normalize sticking to our strategy. Let's normalize not having to jump in at 1%, 2% of our account, getting in that 0.25% and seeing what happens. Let's normalize, putting in our alerts and letting it ring at certain levels. Let's normalize not taking a trade because we're looking at the Dixie and we're coming to a conclusion that the Dixie isn't doing what it was. Let's normalize closing our trade or protecting ourselves before major news. Let's normalize it. Let's not make this thing like to be some sort of flex. Like, if we don't do it like this and we don't jimmy and press L1 and X and star at the same time, it's not going to happen. This is normalize it. Like, bro, I'm a trader, bro. I can take my money confidently, give me 10 grand. I can confidently make 1%, 2%, 3% in the market. Or you want to make more money? Is that enough for you? The fact that I can make £30 from your money? Cool. Give me more money. Give me 100 grand. I could give you 3 grand back every single month. You want more money? I can give you more money. Because I can confidently make 1%, 2%, 3% a month of my money. Therefore, I'm doing better than my bank. Not only my underpants in my house is doing better, giving better returns than the big institution that is my bank that I give my money to every single month. That is the only thing that this trading is about. It's not about anything else. It's about exactly what I just said there. That you are in a position where you can grow your wealth by having an understanding of the markets, yourself. Now, if that means you become a multi-millionaire trader, by all means, fantastic. Don't forget me. Make sure you buy me something nice. Yeah, make sure you take me out for a drink. But if not, at least you can turn around and say, you know what? I'm confident that I can take my pension or I can take my money that somebody's given me. Let's imagine, for argument's sake, you got Howard off. Let's make it 10K. Not even something crazy. For whatever reason, you took 10K and you should be able to, at some point, confidently say, I'm not going to leave this in my bank account for me to spend on parking tickets. I'm going to put this money in my account, my brokerage account, and don't want to lose it, but I'm confident that I can stick to my rules. And I'm not going to trade 1% of this because I'm so scared of losing it. I don't want to lose it. I'm going to trade this. So 1% of this 10K would be £100. You'd be £100. Yeah. I'm not going to trade at 1%. I'm only ever going to risk 0.25% at a time. 0.25% at a time. That means I'm going to take this money and I'm going to put in trades on at £25 risk at a time. And over time, you took a 1 to 4, you made an extra £100. Another day, you took another 1 to 4, you made another £100. Over the time, you turn this 10K into 11K. I'm just letting you know for free, it would be practically a complete different parallel universe for you to have left your 10K in your NatWest and you to come back there and look at it at the end of the month or the end of 2 months or the end of 3 months and see 11K in there. It'll be a completely different universe that you live in. It's not happening in this universe. And that's it. That's trading. Now, if you actually believe that what you're going to do is take your 10K and turn that 10K into, 1.2 billion, I'm going to let you know unlikely. Sorry, sad but true. If you're a real boss, real bad man in the trading space, and you actually don't mind this money, you could be a lot more aggressive. And yeah, maybe you do turn 10 into 50 or 10 into 20 or 10 into 30. Possible. I'm not saying it's impossible. I've done it. But that necessarily isn't trading. That isn't where we start. That you're going to be risking your hard-earned 10K that you just got from your inheritance because Auntie Jackie passed away and left you 10K. That you just went and gambled it in the markets. No. You're just trying to grow your wealth out of your own powers. Maybe Auntie Jackie didn't leave you 100K. 10K, sorry. Maybe she left you 100. Now it changes things because you didn't just make 1K in that month or that 2 months. You now put a 0 on it, 10K. That changes things a little bit because now you made more money this month than you make from your job. Now you've got a decision to make. Do you go to work and deal with Susan in HR that keeps chatting rubbish to you, or do you lean into saying, I'm going to be a full-time trader? And now you're trading and you're paying your bills. That's it, guys. But I'm telling you, everything I've just said, the only thing that underpins this is management of your risk and learning our strategy. And then you have a mentor, you have a community, which you have. You already can put some ticks in that box, where you have constant learning. You're in a cycle of constant learning. When I'm talking to you and saying certain things in the morning, you're in a cycle of going, oh shit, I didn't really look at it like that. Okay, yeah, come on, I'm gonna add that to what I'm doing. Oh yeah, true, right. I didn't. Okay, he does it like that. Okay, no, but let me test that. Let me back test that. Constant learning, just like if you was a footballer, just like if you was a doctor, just like if you was whatever you want to call, you'd be in a cycle of constant learning. You think your doctor goes to school 25 years ago, gets his papers, and all of a sudden doesn't need to learn nothing new? What, the diseases are not developing? There's not new technology. There's not new medicines coming that he has to learn about. Of course, he's constantly learning. He has to. It's the same when it comes to trading. It's not all of a sudden you've clocked it. You haven't clocked it. You're constantly learning. You're constantly trying to be a little bit better. Constantly. And that's why this community is so important. That's why when I'm talking today and I'm saying, I'm hoping one thing I've said is going to resonate with you to allow you to turn a corner in your trading. One thing I've said is going to make you think of, you know, that's me. I'll be blowing my accounts. Yeah, I know it should be 1%, but there's something in me that just doesn't allow me to put a trade on for £20. It just makes me want to round up to £50. Yeah, but bro, £50 is now, 2.5% of your account, bro. How many times can you take losses like that? Especially if you're trading with a prop from account. They've got rules. You can't lose a certain amount of money per day. It's not to say you're trading live funds where you can lose all of it and it's all you. They'll say maximum drawdown 5% or 10% for the day. Then you've blown your account. Then you can't understand why you've blown your account when you are taking trades that are bigger than your maximum risk. I mean, look, what I'm saying is common sense. It's not even like to say what I'm saying is like some magic. I know common sense is not common, especially when you mix up emotions of trading. You mix up emotions of, if I just get this payout, I'll be able to go on that holiday with my missus and show her that I'm the man. I'll be able to change my car, and all my brethren that was laughing at me will see me in my brand new shiny car. I know. You start mixing those emotions in. You start throwing common sense out of the window. I'm telling you, don't do that. I'm telling you that that's the biggest part of your trading journey that I cannot just tell you about on a breakfast club. You got to experience it and you got to get control of it. And the sooner you do, the better trader you become. Oh no, this trade here, which should be 0.25%, remember, I'll say that a few times, should be a 0.25% trade, I do not care about. I've got no emotional attachment to the number. This number was at, I think I looked at this at one point when we was at $600 in positive. The fact that we're down back here all the way down to zero, I don't care. I don't care because I understand that even if I want this to do well, markets move in waves. So I understand that. My emotions, I'm comfortable with that. I'm comfortable with the fact that the market's going to go $600 and I'm going to look at it again, it's going to be 100. Then I'm going to look at it again, it's going to be 900. And then look at it again, it's going to be 400. Then look at it again, it's going to be 1500. I look at it again, I understand that. So I don't have the emotional attachment to, shall I close my trade? Shall I move my stop? I'm not there. I've gone past there, buddy. Maybe you haven't got there yet, and that's why you close your trades. That's why you stop yourself out from your blessings. Maybe. It will come with time. Keep punching the bag. Keep punching the bag, bro. It will come. You're not going to turn into a world champion boxer by coming to the gym once, punching the bag, doing good technique, and then all of a sudden you're in with, a Floyd Mayweather for, fighting for $50 million. Doesn't work like that. Keep punching the bag, rude boy. You'll get your chance. Keep skipping. You'll get your chance. But I've been skipping for hours. Skip for another hour. Shut up. That's how it goes, guys. I'm showing you these different examples across multiple different disciplines, across multiple careers, multiple things you can do in your life. It doesn't come the way that they're showing you on Instagram. It comes from the graft, from the pain, from showing up every single morning, from carrying out your strategy, from getting the discipline. And at some point, hopefully, you will be able to make some money from this. And if you don't, if you skip one of those phases because, oh, this is long, man, or I lost some money, man. That's like you turn around and saying, oh, this is long, man. You know, that guy punched me in my face. This is long, man. I had to sweat a little bit. This is long, man. My arms are hurting me from the gym. This is long, man. I didn't get that promotion straight away within the first 3 weeks of working at this business. Oh, this is long, man. I started to do my own business and I haven't become, Jeff Bezos straight away. It's actually quite hard and I don't know when my next meal's. Okay, with all of those things, if you quit, you will achieve nothing in all of those areas. That's fine. That's your decision. It's your choice. So, like I said to you guys, lean into the strategy, lean into common sense, lean into becoming better emotionally. Because you see what I'm teaching you is not just about trading. It's about Jigs has £1,000 in his bank account and his brethren's. He's gone bond street with his brethren's and they're going to go and buy a £500 t-shirt. And it's about Jigs going, is that above my risk? Yeah, it's a bit above my risk, buddy. Sorry, buddy, no, I'm not buying that t-shirt, but instead, I'm going to go Zara and I'm going to go and buy a t-shirt for within my risk because I guarantee you, when I get to the dance, I'm drawing more gal than you in your £600 t-shirt. So I'm going to stay in my lane and I'm going to use my resources within my risk. Because worst case scenario, if I go out and man spill, ace of spades all over my t-shirt or red wine all over my t-shirt, I just don't care, buddy. But you see you, because I know you've only got £1,000 in your account, Jermaine. Because you sleep in a room with your little brother in a bunk bed, and your mum's is walking in the room with her shopping from Asda. So I know you've only got £1,000 in your account, and I don't understand why you're spending £500 of that on a t-shirt. You see you. I know if somebody spills red wine on your t-shirt, it's going to hurt. If you get set plus at that amount of money there, it's going to hurt you, bro. But you've learned better. You've learned money management. You've learned how to control your emotions. You've learned how to understand what's going on in the world, to be locked into the news. Once upon a time, I think I cared what was going on in the world. I don't care. I used to be like, yeah, politics and all that. Doesn't really affect me. I don't really care about that. I'm just trying to get my money so I can go and buy the next shiny thing. But now I'm very interested in what's happening in the world. I'm very interested in what's the new thing. I'm very interested in AI. I'm very interested in cybersecurity. I'm very interested in water. I'm very interested in resources, the war. Why? Because I live in the world. Believe it or not, I live in the world. So surely I need to pay attention to what's happening in the place that I live. My kids live in the world. Opportunities of tomorrow is going to come from me understanding what's happening today. It's going to come from me understanding what happened historically. It's all the same. When we're looking at the trade markets, we look historically to see what happened so that we can make decisions for today. So what's different in the world? Nothing different. There's no difference. If tomorrow COVID started happening again, there's a lot of people that would say, okay, there's a lot of people, if you're going to go with the conspiracy theories, are going to say COVID was a trial run, that they learnt a lot from COVID. I learned a lot from COVID. I learned that there's idiots that are willing to just listen to anything the governments are saying and put pieces of paper around their face and walk around and do just because they was told to. They're going to take injections that they're like, whoa, wait a minute, you came out with a vaccine in 3 weeks? That's pretty quick. I learned that. I learned that there's two different type of people. Because I was definitely that guy in Tesco's that had no mask, just walking around saying, no, this is nonsense. The mask that I bought from Amazon that smells like red dye, because I decided to choose to buy a red one, that's good for me. That's supposed to be helping me. So that was a trial run that you've learned something historically that if it happened again, you might be able to make some money from that. Maybe you start selling red masks. Maybe you start getting hold of all the white toilet tissue because people want to go and buy toilet tissue like lunatics for some reason. I don't know. But the point is that we have to use the data. Every single thing we can see here is data, and we need to make an assessment of that data and act upon that data. And that's it. That's how simple trading is. Guys, have an amazing, amazing, amazing day. I hope that something I said today resonated and it's going to allow you to make better decisions in the markets. And more importantly, don't be so hard on yourself. Understand that, what you're doing and what you've been able to achieve. Let me tell you something. You've been in a prop firm account and you've passed the challenge. That means you made 15%. 15%. So I'd like to ask you openly, what have you made 15% returns on in your life in any other investment? No disrespect to anybody, because maybe you've had some great investments in the past. So asking you right now, for the people that are on this call right now that have passed challenges multiple times, I'm going to ask you a simple question. Have you made 15% on your money in something legal, yeah? Something legal, yeah, in any other space? Yes or no? Just asking. Anybody want to answer? Is anyone too embarrassed to answer? Anybody too embarrassed to answer? Is anybody going to say to me that they've made 15% in some other investment that they'd like to share? I mean, more than likely you haven't. That's my point. More than likely, you haven't made 15% returns on any type of other investment that you've made. But yet, you've passed your prop firm challenge like multiple times and made 10% and then made 5%. You're already winning. You just need to understand how to fully win. Yeah, guys, have an amazing day. Love